Hey guys, until we find out better news out of Ukraine, I will not be using the what's good welcome, so I'm gonna just jump into it, guys. Today we're gonna have a brief look at Palantir and see whether or not it's a good candidate for the wheel. Have a look at what exactly the wheel is really briefly, and then having a brief look at Palantir. What's the intrinsic value of this hyper growth stock that has been pounded, literally pounded over the past few months here, even year I would say. And then just having a look at whether or not the wheel would be a good idea here, what does it offer us, and then what do we want to do with it, guys. Before we jump into that, please make sure that if you want to support this channel here, you have a look below. There's a Patreon link where for just $5 you have the ability to not only support the channel but also make sure that you get access to premium content. So with that out of the way, guys, yeah, let's have a look at Palantir. So here goes Willow. Cool, guys, so as I was telling you, the stock here doesn't look so fancy, the chart especially, but I mean, it's $11, right? So if it's $11, it means that most portfolios out there should be able to afford running the wheel on a stock that would basically ask you to invest $1,000. Now, if you don't have $1,000 to invest, you should not be playing the wheel. You should try to find other strategies out there, maybe bull put spreads, maybe something else that utilize less capital for competitive rates of return. That being said, guys, we're looking at Palantir here. In my opinion, it's a really great stock to buy at these prices. I covered why I think the earnings were really positive in a video that I released, I believe, Sunday, so I'm gonna link that up here if you guys want to have a look at that. But yeah, it's a really great stock. And then if we want to have a look at what the intrinsic value is, guys, and I do want to mention that I want you guys to take this with a grain of salt, because Palantir is such an early stage stock that calculating intrinsic value is really complicated, and not only is it complicated, it's also kind of a crapshoot. So with that in mind, guys, if we have a look here at Palantir, and again, this would be part DCFs on all sorts of different stocks would be part of that premium package that you could buy into if you offer $5 on my Patreon for premium content and supporting the channel. But yeah, Palantir would be roughly at $10 intrinsic value, guys. Again, this is taken with a grain of salt because their numbers look really good, but they still have dip. They are still not, technically speaking, profitable, although we all know that they kind of are. They're not by GAAP standards. So guys, with that in mind, Palantir, running the wheel, what are we looking at? Let's have a look here, guys. Again, the stock right now is $11.47. So if we want to run the wheel, we're gonna start selling a put, right? Never sell naked puts. I insist, please don't ever do that. If you want to create alpha to generate revenue without really having the $1,000, again, do a bull put spread on another stock, on anything, but don't run a put naked. So with that in mind, guys, yeah, looking here at Palantir, we are gonna probably be looking at a delta of roughly 0.3, 0.4. Let's see what we got. So honestly, guys, a 0.3 delta would be at $10. This option would be expiring on the 14th of April, so there's quite a bit of time. Why am I going so far out? Well, first off, I want to make sure that theta is ramping up, and theta is usually the most rampant between 30 and 45 days. That's when it really starts all engines. I believe the 14th of April, as of today, 1st of March, is probably out roughly 45 days. So that's why I'm looking at this one, guys. So yeah, if we look at the 0.3 delta, actually it's 0.27 delta. We're gonna be able to make a profit, or premium, basically what it's called, of roughly $63. Obviously the middle between the bid ask spread here. I do want to say that the market is not open right now, so these are subject to change as soon as the market opens. So yeah, we'd be making $63 basically by saying that if by the 14th of April PLTR is at $10 or less, we are buying 100 shares of this. So we're basically gonna put up $1,000. We're gonna get immediately on the spot in our pocket $62, guys, which means a 6.2% ROI on our investment within 45 days. Not too shabby, if you ask me. If you can repeat that across the full year, you're gonna beat the markets easy. So yeah, basically it means that we're gonna not spend $1,000 in case we get assigned the 100 shares of Palantir, guys, we're actually gonna end up spending $937 for those 100 shares. So our average open for that 100 shares would be $9.37, guys. So we can then go and sell covered calls at 11 or 12 bucks, continuing the wheel and generating extra profits. Now, to take it a step further, guys, and really try to envision for you guys what that next step would be, the selling of covered calls on that position, let's pretend that we fast forward here roughly a month and a half, and then we get assigned the 100 shares of PLTR. The current price of PLTR now is $9.85, as you can see here. We got assigned, and remember, we got assigned at $10, but our entry price is basically $937. So with that in mind, we are gonna go ahead and we're gonna sell a covered call at $11. We're gonna make another $1.46 in terms of options, so that's gonna be another $146 straight into our pockets. And with that, guys, we're gonna basically be able to own the shares here for $7.91 per share. Now, if we get assigned the shares again, if we get the shares called away from us at that $11 strike price, that then means the fact that we have made no less than $309 on this whole wheel strategy. Again, selling a put, getting assigned that put, getting put the shares, selling a covered call, getting assigned on the covered call, and getting those shares called away from you. And then at the end of the day, guys, you're left with $309 for the whole thing that probably took you 2 months. And $309, guys, out of an investment initially of basically $937, I think we said we had, is a whooping 32%, almost 33%, guys, of ROI that you were able to generate in just 2.5 months. This is why, guys, running the covered call strategy and then obviously the wheel to back that up as well is one of the best strategies that you can deploy in the markets. Just please make sure that you do this with really good stocks. Palantir here actually is kind of siding on the riskier side of things, but obviously it's a pretty good one nonetheless. I do recommend though that you do this with stocks that are listed either in the Dow Jones or ideally in the S&P 500, just so you can get all of that drag that those stocks come with. I do understand though that those stocks require quite a bit more capital. So yeah, $1,000 of capital can buy you the strategy that you can run, and then you can generate 33% ROI in just 2.5 months. Now, if you're able obviously to do that same thing for every 2.5 months throughout the year, that means that you can almost do this 5 whole times, making sure that obviously you generate roughly 165% ROI, guys. So not only are you able to generate enough ROI to beat the market, you're actually annihilating the market. There's no competition there. So guys, that's all for today. To have access to my portfolio, to see what I'm doing, to be able to receive this advice firsthand on your phone, please check out my Patreon. $5 will get that all, and I'll catch you guys next time. Take care.